Have you ever wondered what could spark the next massive move in Bitcoin? As we move into 2025, a perfect storm is brewing, and it's about to change the crypto landscape in ways many aren't ready for. But what's the real trigger behind this potential surge? Could it be tied to something as subtle yet powerful as interest rates? Stick around, because today on Wall Street Mindset, we're diving into how one key decision could send Bitcoin to unprecedented heights. Before we jump in, make sure to like, comment, and subscribe so you never miss out on insights that could shape your financial future. To understand where Bitcoin might be headed, let's rewind to 2020. The world was in chaos, and the Federal Reserve slashed interest rates to near zero to keep the economy alive. Fast forward to today, and we've seen those rates climb back up as the Fed fights inflation. But there's a shift on the horizon. A shift that could make 2025 a year for the history books in crypto. Experts are predicting a major change in the Fed's approach, one that could send Bitcoin skyrocketing. So, why do interest rates matter so much for Bitcoin? When rates are high, like they are now at around 5.38%, investors tend to park their money in safer, lower-yielding assets like bonds. But the Fed is expected to start cutting rates, potentially dropping them to around 2.8% by 2025. This would flood the market with investors looking for better returns, and Bitcoin, with its limited supply and increasing institutional support, becomes a prime candidate for that investment. Imagine trillions of dollars currently sitting in money market funds suddenly looking for a new home. Bitcoin, once seen as a fringe asset, is now being embraced by financial giants like BlackRock and Fidelity. With this kind of institutional backing, the demand for Bitcoin could skyrocket, just as supply remains limited. Let's put this into perspective. Remember when people scoffed at the idea of Bitcoin hitting $100,000? Well, fast forward to now, and analysts are talking about Bitcoin potentially surpassing $200,000 by the end of 2025. The same principles apply: high demand, low supply, and a macroeconomic environment that favors risk assets like crypto. But it's not just about predictions. Look at the recent events. Despite significant selling pressure from entities like the US government and Mt. Gox creditors, Bitcoin has remained resilient. Even with billions of dollars worth of Bitcoin flooding the market, it's held its ground. This shows the maturity and strength of the asset in ways we haven't seen before. Let's not ignore the fact that while Bitcoin has faced short-term turbulence, it's weathered storms that would have once sent it crashing. And while governments are offloading Bitcoin, institutional investors are quietly accumulating it. They know that once the selling stops, the price is primed to take off. Another important factor is the performance of gold, which recently hit an all-time high. Bitcoin, often referred to as digital gold, offers a finite, even scarcer asset. In an economic downturn or period of uncertainty, Bitcoin could shine even brighter as a hedge against the system. So what does this all mean? It means we could be on the verge of witnessing Bitcoin's most significant run yet. Between the Federal Reserve's rate cuts, institutional adoption, and Bitcoin's fundamental scarcity, 2025 is shaping up to be an explosive year for the cryptocurrency. If you're thinking long-term, now is the time to stay focused and not get distracted by short-term noise. If you found this breakdown helpful, don't forget to smash that like button, leave a comment with your thoughts, and subscribe to Wall Street Mindset for more deep dives into the financial moves shaping our world. With that said, thanks for watching, and until next time.